Good morning. Today is Thursday and it's January the 18th. The time right now is 9:18 in the morning. Overnight, we have the release of the US retail sales, which was very robust. Market was expecting a rise to 0.4% in December from the November number of 0.3. The number came in at 0.6, which is 50% more than the market expected. And even a control group, which exclude automobile sales, as well as gasoline sales and building materials on top of food deliveries. Those were taken out of the retail sales component, and that even shows a very strong rebound. We can see that the November number was 0.5. It came in at 0.8 for the month of December. So overall, it was a good showing. Suggests the U.S. economy is very, very strong. U.S. consumers are spending, and this actually tallies with last week's CPI numbers, which shows a resurgence of inflation. So taken together between these two numbers, the odds of the Federal Reserve cutting interest rates when they meet at the end of this month or at the beginning of next month is highly unlikely, and expectation has shifted to perhaps the earliest time in which the Fed may actually move on interest rate is going to be March, when they meet for the second time this year. So we can see that the number was good. So the Dow actually came out because the expectation of a rate cut now has evaporated somehow. But I think that is going to be setting the stage for higher prices, because despite this, we can see that there's hardly any movements in equity markets. Market did pull back a little bit, but it wasn't a major fall. So this set the stage for higher prices, in my opinion. There's a very good possibility going into the balance of the week and perhaps into next week, we could see prices starting to rise from where we are right now. And in the Dow Jones, we can see the high traded so far is 37,825.27 in the cash index. There's a very good chance the market may actually exceed this high to create a new high going forward. In the S&P 500, the high remained at 4,802.4, which is a hair breadth away from where it was at a record high of 4,818.62. So last night's number also may actually be a good time for the market to rally, because it's a good number, by the way. It shows strong economic growth. So that should actually support higher prices going forward, despite the fact that the Federal Reserve might not cut interest rates going into the end of this month. But that is okay, because overall the growth is actually looking to be good. And I suspect we're going to see a brand new record highs in the days, perhaps in the weeks ahead. Okay. And in the Nasdaq 100, yes, initial reaction was a pullback in the Nasdaq 100 to as low as 16,561.5, but I think it closed on a stronger note, and this is laying the foundation for a sort at 16,969.17, which is currently the all-time high. There's a good chance we could see a new high in sync with the other major equity index. And over in Asia, let's take a look at how Asia. Last night, we have a pullback in the Nikkei 225 from 36,240 was a new 34 years high, and it closed on a weak note. This morning, we have a bit of a buying interest coming in. That actually causes a mixed feeling here, because on the daily time frame, you can see there is a reversal pattern, and this pattern here that we see here as a result of yesterday's all-time high are not 34 years high. It causes a reversal pattern. So in the Nikkei, we could be seeing something a bit different from what we are going to be expecting in the American markets. So there's a possibility we may see extended losses. The immediate target will probably at 34,990. This will be based on the swing low that we saw on January the 11th. Okay. Of course, it can swing either way. Of course, the other market that came off yesterday was the Hang Seng. This is largely on the back of the release of China's Q4 GDP numbers, which came in at 5.2%, slightly below the market expectation of 5.3%. It was a good number on any given day, because 5.2% is a lot higher than the US Q3 GDP of 4.9%. So, but the market actually sold off Chinese stocks together with the Hong Kong equity markets. So despite the strong number, we see that the Hong Kong market, the Hang Seng futures actually closed traded to a low of 15,172 before bouncing off a little bit. So let's see what happens, because the market is so weak right now on all this narrative that the Chinese economy is going to go into a deflation, and that has been the bear hug going forward. Okay, and over in the dollar, this is very interesting. Last night's retail sales prompted the dollar to rally to 103.45, even though there is no prospects of a rate hike at the beginning of next month. The market has actually rallied to 103.45, and this is incidentally where the market closes in November of last year. So it actually hit a brick wall. The November close is 103.46, so it came in just under that, and right now as we are speaking is pulling back. So this pullback here does suggest that despite the possibility of no rate cut going into the end of the month, the dollar may actually pull back to retest the 101.61 levels before the market rally this week. So I think the likely path will be a drop, ideally to test the 101.60 levels before the market resume its rally, targeting 104.20 to 104.44. Okay, that I think will be the ideal unfolding of the dollar movements. And if that's the case, I do believe that the principal currencies are getting ready to rally. Last night, we can see euro dollar drop to as low as 108.44. And now, as we are speaking, the market is bouncing back and currently trading at 108.96. I think the path of less resistance is for the market to go higher. If the market can go back to 110, which is where the market was twice on January the 11th and again on January the 5th. I think this 110 level could be the barrier to higher prices. A challenge of this level will not be too far from the possibility. So in the sterling has an outside bar. We have a very bullish engulfing bar after the market take out the 126.10, 126.11, which has basically held the market 4 times in a row since mid-December. So last time we have a breach of this level. I think the market is so obvious because of this strong support here. A lot of stops will be placed just under this level, and the market did went in to search for stops, and the market bottoms out at 125.96 before it reversed very strongly. And now, as we are speaking, the market is already at 126.88, and it is setting the stage for higher prices. And a challenge of 128.27 is almost a foregone conclusion. I think there's a good chance the market may actually target the 129 levels. Okay, perhaps, yeah, 129 levels. I think there's a good chance if the market goes into this breakout of prices, especially if it can test the upper end of this resistance line. I think that's where I think the market may be heading for. And over in the Aussie currently has a major reversal as we are speaking right now, although it is still very early in the 4 hours time frame, and the low traded last night was 0.6525, and I think it's poised to go higher to challenge this bracket of prices between 0.6730 to 0.67 I think this bracket of prices is going to be a possibility. Okay, and over in dollar Canadian, very similar to my outlook for dollar, I think we will see a pullback, and the nearest swing low is at 133.43. That could act as a target from where we are right now, just under 135 even. And in dollar yen do also may mimic the general movement in the dollar itself, although there's no classical reversal signal that we can see in dollar yen pair, but I think the overall movement in the dollar may actually bring down dollar yen to retest the nearby swing low at 144.35. And as when we look at the precious metals, we can see precious metals has actually gone down after consolidating for a few days. We can see prices went up to as low as $2,002 and is currently finding some kind of support. Near term, I think the swing high here, the nearby one is at $2,033. I think that will be the first level to challenge. I think the market may actually gain some ground going into $2,033. Over in silver seems to be holding out well. There's no bullish signal, at least not in the 4 hours time frame. The low traded last night was $22.48, marginally above the low that we saw on January the 11th. So we can see that there is a double bottom, so to call, and there's a good chance market may bounce. And if it bounce, I think the area between $22.86 to $22 or even $23 is a possibility. Okay, and crude oil pulled back last night to test the $70 per barrel, and it closed very strongly, and now the market is rallying even stronger. I think the pullback for $75.21 may be over, and the market is looking to trade higher. I am hopeful that the next level the market will be at least $77, perhaps into between these levels here at $77.70 to $78. Okay, so these two levels here seems to be a good target. Of course, the best outcome is for the market to try the $79, but for now, I think $77 upper end of $77 is a good target to aim for. And over in Bitcoin, we can see Bitcoin practically died. There's hardly any movement after the euphoria is over, after the launch of the BTC ETF trading. And we can see the market is high this year so far is at 49,000 to a low of 41,500, and the market has been basically moving sideways with a little bit of upside potential if the market actually bounce. The area between 45,250 to 23,000 or 46,250. I think that will be a good area to watch out, and in particularly this area of 45,557 to 46,265. That could act as a barrier to higher prices. But I think generally speaking, this pullback is not over by any means. Any kind of rally should be seen as an opportunity for a sales for the market to go below 41,500 eventually. So this is my 2 cents worth, and I wish you guys a great day ahead, and I'll see you tomorrow where we are expecting the Michigan Consumer Sentiment Index for the US. Bye-bye. Take care.